here in just another minute or two as we talk about successful succession planning here in Montana. So you're in the right place. Just stay tuned and we'll be ready to go here shortly.
All right, Todd, I think we can get started. Slides are all taken care of.
Slide deck's ready. Great. Well, thanks again to everyone for joining us here today. My name's Todd O'Hare. I'm the president and CEO of the Montana Chamber of Commerce. And I want to thank everybody for joining us. We're going to try to do our best to be respectful of your time and be efficient with this. So we're going to start right here at 12 o'clock. One of the values that I think are the strongest with the Montana Chamber of Commerce is that of a convener. We see the value in bringing experts together with interested consumers and business leaders and providing that sort of information and making those connections and those networks pull together and work for the betterment of the state of Montana and for the betterment of the business community as a whole. And so that's our vision with this webinar that we're doing here today. And I think we're going to be doing some additional webinars in the future that may be more specific to specific topics that we're going to be covering here today. I think it's important to know that this webinar is not designed to answer all the questions. This is intentional for the purpose of kind of planting some seeds for you to consider if this is something that may be of interest to you, to kind of give you a framework of some of the thought process that is required to go down the road of a successful business transition. And we know from experience that there are successful transitions and there are ones that are unsuccessful. And I can give you anecdotally that we know of a company in eastern Montana that the husband unexpectedly passed away from a heart attack, and his widow did her best to hold the business together for a number of years and was not able to do that as she saw the sales continue to decline. And then ultimately, after about 3 years of seeing the company kind of on a gradual decline, she started to approach folks to see about selling her business, selling her husband's business. And by that time, the business had gotten into such a shape that there was no value for it to be sold as a business as a whole. And she was forced into a situation where she had to piecemeal the business out through equipment and various assets in kind of an auction sale, if you will. And everybody lost in a situation like that. The owner lost, the employees of the company lost, the community lost. And this is part of what we're trying to accomplish here, is to avoid those sort of situations from happening. And we also know, that there's been some successful transitions. We know of one in the Bozeman area that happened earlier this fall with Dayspring Cleaning and Restoration, where they went through a successful transition and merged with another company. And that was successful for everyone. There was additional capital for the owners. There was capital for additional growth. The employees ended up coming out the winner in that sort of situation, and win-win sort of situations. And so our intention here today is to just kind of start planting those seeds for some of the work and some of the thought process that may be required to begin the process of transitioning your business, if that's something that may be of interest to you. And so kind of got an all-star panel here, I think, from Montana's perspective, to talk about specific pieces that are required for a successful transition. And so we're going to go through each one of them on a one-by-one basis and have them talk for just a few minutes about some of the things they work on, some of the things that they believe are necessary for considering. So let's start with Vu Pham. And Vu has a great story. Vu was born in Vietnam and he left in 1975 as a refugee, and then grew up in the Midwest. And then about 20 years ago, he made Montana his home, and first came to Missoula and attended the University of Montana at the School of Law, and then spent 12 years working as a staff attorney for the U.S. District Court Judge Richard Siebel, and then Jack Shandstrom. So Vu went back to school, got his master's degree in health administration, and became the general counsel of a large industrial conglomerate in the trucking, mining, oil field service, landfill, and construction space. He later became their chief executive officer for 6 years. And then based upon this breadth of experience, he understands successful transitions. He understands the full breadth of the business community, from running and scaling a business to strategically growing sustainable businesses. So Vu, thanks for joining us today, and the floor is yours. Feel free to unmute yourself and proceed.
Great, thank you. Good afternoon, everyone, and I appreciate you taking the time out and attend this webinar. You've got a great panel on today that represents kind of the breadth of exit planning. My conversation is really before you sell and how to get ready for sale. I'm a certified exit planning advisor with the Exit Planning Institute. And what I want to talk to you about is the fact that 80–90% of your net worth, I suspect, is tied up in your business. And it's tied up to financially, through personal guarantees, through sweat, through toil. And you've built this business up, and now you're getting ready to sell. And this is essentially, you're looking to harvest all your hard work over the years, decades, whatever. And our goal here is to help you do that harvest in the best way possible. And the way we talk about it is really in the context of where are you at now? How much time do you have before you want to get out? And then how do we get you out in the most financially viable method possible? About 70% statistically of businesses are almost not worth anything tomorrow if you sold it, other than asset value. And that's a harsh thing to say, but I really want you to think about it, because many businesses are not transferable, in the sense that the owners of the business have not made themselves dispensable to the business. So how do we do that? And so usually my work comes in about, on average, 3 years before business is looking to sell. I come in there and I work with my team and your team to assess, okay, where are you at now? What is your net worth between personal assets, investments, and value of the business? What is that worth? And then secondly, what do you need in order to be comfortable to live the lifestyle you want to live? And then how much time do you have? And those are kind of the analyses that we work on. And then the other piece of it is, once you figure out what you have, how much time you have before you want out, and how much you need, we work on de-risking that business and de-risking it both from governance, legal, compliance, wealth management, whatever it is. And then we work on getting you to the point where you're ready for sale. And the concept of sale is nebulous to the extent that you want to get out, but you've got to start thinking about now who you're going to sell it to, because you have to design that business toward that sale and manage that risk toward that sale. And is it going to be your employees? Is it going to be a strategic buyer? Is it private equity? What is it going to be? And then we start building that business toward that end. And that's where all the folks on this panel come on: wealth managers, accountants, lawyers, venture capital, as well as investment bankers. The way it takes a true team to really get exit planning done well, and to have everybody in the place doing their role, because each of us brings a lens. You yourself, as an owner, bring a lens to the exit planning process, and it's a different lens, and no one person at the table is an expert on any one aspect of the sale. So it needs to be a collaborative team approach. And the other piece of it is there's a responsibility here to plan a successful transition. Your family, I mean, you've put a lot of work in this. There are a lot of you, either yourselves or your kids, are counting on this business that you built to take it forward and grow it. You've got employees relying on you, customers, vendors. So it's really important to really think this through as you move forward. Can we go to the value maturity index slide? So this is the 5 stages of value maturity. I mean, we identify where you are right now, and then we start de-risking it. That's I think really key. I mean, is it you have a will? I mean, that's a big deal. I think Todd referenced the business owner who's one of the owners passed away. So estate planning, basic thing. And then we look at the business. How do we de-risk the business? And is it creating processes? Is it creating governance, accounting, cleaning things up? And once we de-risk the business, we start building it for growth, for the exit. And that goes back to the importance of time. How do you build your existing management team in order to run that business without you? Because that's what you're selling, is you're selling the assets, the going concern, your management team. There's more value when you can package that thing up and give it to a buyer. You're going to get a larger multiple on the sale, and then harvest that upon sale. And then the next thing is, how do you manage those dollars that you receive upon sale in order to ensure your comfort level and your lifestyle living moving forward from that. Another question that keeps coming up as I work with business owners that I think is really important is I ask them a question. Okay, it's sold. You got what you wanted for it, and the question is, what are you going to do now? And they have trouble answering that question, and that should be really important too. What's next? And what am I going to do? I mean, if you can't really clearly answer that question, where you're going to, many business owners are defined by their businesses. So that's a really important question to ask yourselves as you move forward. Then let's go to the 4 C's, please. The next slide. So this is the 4 different types of capital that we need to be thinking about. Human capital. What are your employees like? What's the culture like? Because these are the things that buyers and acquirers are going to look at. Structural capital. What systems do you have in place? What operations, standard operating procedures? And is it designed to scale? Customers, how are those relationships? Are they strong? Are they transferable, even more importantly, to the new buyer? And how do you build those customer relationships now? And if you're looking to sell to your management team, have you transferred all the reputation that you yourself as the owner have to that team? Are you intentionally doing those things? And then social capital. I mean, what's the perspective of the business and its reputation in the community, both locally as well as statewide or national? So these are all important things, and the intangibles above and beyond the financials that potential acquirer is going to look at to see and measure multiples of sale on. So next slide, please. And this is kind of the roadmap that we use in order to understand the exit planning process. I've kind of talked through much of that. Is understand what do you have now, what's your net worth and assets, both in personally as well as in the business, and then looking at how much time do you have, and then how do you start preparing both financially, personally, as well as de-risking the business in order to sell it well. And then at that point, in theory, as you de-risk, as you improve business processes, and you should increase financial performance as well. And then the question then becomes a decision point. Do I keep it? Do I sell it? And that's really the goal, is to get to that decision point from personally, business-wise, and operationally. And last slide, please. So this is a 2019 report that got done. It was a survey of all businesses, and the conversation of a breakout of where business owners were, when they intended to exit, what was their time frame, and were they ready to exit? And the reality is 100% of you as business owners are going to exit your business, and you're going to exit one way or another, through divestiture, through disability, through death, or through divorce. And it's up to you as business owners to decide how to control that that change in ownership. So with that, I will pass my time over to the rest of my colleagues. Thank you, Todd.
Thanks, Vu. Appreciate your participation here today. And I think one of the things too that we want to stress as we go through this is that this is a confidential sort of a presentation that you're participating in. And as we get towards the end, if you have questions, you should feel free to ask those questions or type them into the chat box down at the bottom of the Zoom here, and we'll get those questions answered for you. But we're trying to treat this in a confidential nature so that you can feel confident to be able to ask questions that may arise through the presentation. Next piece that we want to turn to here is actually one of the more fun parts of it, in the downturn that we have in the Montana and the US economy. And James Thompson is going to be talking about the buyer end of this spectrum. And what's fascinating to me is that James and we've talked over the course of the last year plus about this subject and about the interest in Montana and about the amount of capital that exists out there, is that there's a great news story here for Montana businesses, despite the fact that we are in an economic downturn, that there is still a tremendous amount of capital is sitting on the sidelines that is looking for a home. And there's a significant amount of capital that's looking for a home specifically in Montana. And in my mind, it's important to have someone like James, who grew up in Montana, grew up in Butte. He's able to come and be able to speak our language, if you will, and be able to be that sort of a transition sort of a person. James is a Butte native, spends about half of his time in the Big Hole Valley working as an advocate on behalf of the Montana entrepreneurs on raising capital and transitioning their businesses. Half of James's professional life has been spent in corporate finance, such as banking and investment banking and venture capital. And the other half has been in actually running companies, such as the CEO or the CFO, or a functional leader on a leadership team. Throughout his career, James has closed more than 40 transactions and raised more than $250 million in growth capital. As a member of the Montana James is a member of the board of directors of Brown Strauss. He's also on the board of directors for the Montana Ambassadors. He serves at the pleasure of the governor, which is a volunteer, not-for-profit, bipartisan organization of leaders in business and education. James received his BBA from Gonzaga University School of Business and an MBA in entrepreneurship from the Foster School of Business at the University of Washington. I want to thank James for joining us. James, I'll turn the floor over to you.
Thank you, Todd. Appreciate everybody participating today, the chamber, my fellow panelists. This is a complex area. We're not trying to answer all the questions, as Todd said, but today in the US, there are 7 million private companies that have owners that are over 55. And here in Montana, there are 10,000 companies with owners over 55, which is quite mind-boggling. And all of those companies have to figure out a transition. And the chamber and the governor have made this an important societal issue about losing tax base and losing employees and jobs if it's not done properly. So this is not just a commercial issue, it's a political issue, it's a societal issue. And so what I do is I'm an investment banker. I work in Seattle, half my time in Seattle, half in the Big Hole Valley, as Todd said. Investment bankers doing capital raising as well as mergers and acquisitions or business transitions. And I work for a firm called Alexander Hutton. It's the oldest firm in Seattle. We've done 215 of these types of transactions. I'm going to show you a couple of examples. We work with successful private companies. When in fact there are 7 million private companies in the US, there's also at the same time been $1.5 trillion raised from institutions like college endowments, state pension funds, high net worth individuals looking to buy those companies. They're investing not only in public equities, but in private equities or stock in private companies. There's $1 billion of private debt that's out there in this low interest rate environment. So there's a lot of demand for businesses. And I want to tell you about a transaction we just closed, a little more detailed than Todd offered, with a company out of Missoula. But if we can go to the next slide. Yeah, Alexander Hutton, this is the timeline of a process. We, again, have gone through this 215 times over 30 plus years. This is a sort of a 6-month process. And it starts with a lot of work around understanding the business, putting sales and marketing documents together. The sponsor search along the bottom is sponsor means who is the buyer going to be? Whether it's a strategic buyer, that might be somebody who's already in the business and wants to add Montana as a region that they're not in today, or a financial buyer who wants to invest to generate returns on their capital above their cost of capital. So just straight up investor financial type. So those are private equity firms and private debt firms. Go through the process, which involves meetings with management, reviewing plans, soliciting offers, agreeing to terms. I work with people like Bill and Vu on the legal side to go through due diligence and do the documentation so that you're protected. And then we close the transaction. I want to share a couple of transactions. If we go to the next slide as examples, these are, one is an IT services business. So if you're familiar with the transaction that was done in Missoula last year where Cognizant bought ATG, that's a similar business to Madrona Solutions Group. And Cognizant now is, I think, just committed to 40,000 feet in Missoula, I read today, and really building a huge job base in Montana. And it's just a great transaction of outside capital coming in, allowing a seller to take a few chips off the table, and then continuing to run the business. Madrona was a similar situation, although they wanted completely out. We went out to 97 parties. There's a lot of demand in that IT services space because businesses and enterprises are going digital. And when they deploy those technologies like Salesforce or SAP, they need systems integrators to help them translate what their business does to how the software can enable them to do that. And that's what Madrona was. We send out information, all again under confidentiality. We have NDAs signed. We use project names, as you can see, and we get to an agreement executed, but all with confidentiality at the top of the list in terms of going through this project. Project Nighthawk is a management buyout. It's a Montana-based company a founder looking to buy out, a CEO looking to buy out a founder. And we went out to 45 parties. We've got term sheets and first round offers from 6. And now we're just negotiating the purchase and sale agreement to finish that transaction. A great Montana company, great culture, national accounts, recurring revenue, great profitability. It's just a very well-run company. If you go to the next slide, this is the transaction Todd mentioned earlier. We were called last summer in July. Dayspring had some inactive shareholders. And as a part of those inactive shareholders had to be bought out by the end of the year. By August 15th, we had marketing documents prepared and we went out to 36 parties. And quite frankly, I was surprised by the response. We got first round offers were 12. So 12 out of 36 is a really good batting average for the work that we do. We down selected to 4. We improved pricing and terms, kind of like selling a house where you have a lot of buyers. So you want to inch up the price and the terms. And what I'm most proud about of this transaction, and you can see Mark Springer, if any of you know Mark, there was a great cultural fit. So the owners of the Kansas City Chiefs, along with lots of other businesses, the Hunt family out of Dallas, now have partnered with Mark. Mark was able to take a few chips off the table, but he now is the platform company that is, and they came alongside to fund his growth plan. And I'm just really pleased mostly with the cultural fit, because you go through these journeys with people, you get to know them personally. And I'm really pleased with and excited to see where Mark takes that business to not only expand within Montana, but expand in other regions. If you go to the next slide. So very quickly, because I want to hand this back off to my fellow panelists, deal volume is down at the end of the year, but transaction values are still high. So EBITDA multiples are still high. And I would say that the beginning of this year, it's frenetic right now. The amount of transactions that are coming about, entrepreneurs are saying, I have a great COVID tailwind and I'd like to sell 30 to 40 or 50% of my company. We're just seeing a lot of deal activity right now. So I think this slide will change after the first quarter. And for businesses that are, and we talk about having a tailwind or a headwind. And some COVID businesses, or excuse me, some businesses today like retail restaurants have a headwind, and some like home services have a tailwind. And I would say that there are 2 types of buyers of businesses, strategic and financial. In businesses with COVID tailwinds, you have both options, both strategic and financial. And that is what Dayspring had. In businesses that have COVID headwinds, there's still a terrific opportunity for strategics to come in and say, okay, the playing field's a little less crowded. We can pay a fair price. But now as we understand the business, we know the business is coming back. It's just a matter of vaccines. So we're seeing a ton of interest for those with COVID headwinds from strategics. And I'm very pleased with that as well, because we know this whole situation will end, and you just need to be opportunistic in deploying capital. Go to the next slide and the final slide. I would just say that more capital is venturing off the beaten path, and you'll hear from Jeff Batten about that. We're working with Montana entrepreneurs in both full sale and recapitalizations. We're all former CEOs and CFOs, so we've actually sat in your chair. And the last thing is that we're always available for a perspective. Reach out, have a conversation. For 25 or 30 conversations I have, only 1 or 2 become clients. And I think there are panelists here. And the final thing I would say is, if you're going to sell a business, go through the process, plan properly, but don't sell the company or the business to the first people who knock on your door. Look for an agent. It doesn't have to be Alexander Hutton. It can be somebody else, but make sure that it's a competitive process and that nobody is being exploited in that situation. With that, I'll head it back to Todd.
Thanks, James. And I think it's kind of an exciting message that James has here with regard to the amount of capital that's still available, despite the fact we're in an economic downturn, and the interest that there is in the state of Montana. I think that's all a good news story. James contacted me a couple of weeks ago and pointed me to an example of a true agricultural business that sold in Montana, and he expressed a little bit of regret that there hadn't been some outreach done to, perhaps see if there was more value that they could have received for their sale, because it was a traditional agricultural operation that had deep roots and some value there that he thought probably was left on the table. And I think it speaks to the importance that, regardless of what businesses you're in, if this is something that you're considering, that you should make sure that you take full advantage of the options, or at least evaluate the full options that are available to you. And so thanks for bringing that perspective, and we're glad to have you looking for opportunities in Montana, James. Next, we're going to turn to the accounting side of this transition planning, and that's Dana Springer with Whipfly. Dana is a Montana native. She grew up in Polson. She attended Montana State University. And so, like me, we say, go Bobcats. And for those Grizzlies, you probably feel like you can rest a little bit easier, since MSU lost its head football coach, and that may be the only opportunity that you have in recovering from some of the devastating defeats that you've received at the hands of the Bobcats over the last several years. Anyway, I digress. Dana lives now in Havre, and she's a partner at Whipfly, and she's been with Whipfly for 13 years. Her career is focused on the agriculture industry, providing tax, consulting, and transition planning services to clients across Montana. Dana and her husband live just north of Havre on her husband's family farm. So Dana can speak strongly to the agriculture side of things in this transition planning. So Dana, thanks for joining us.
Thanks. So something we always start out with talking with our clients about is that everything starts with a conversation. When it comes to transition planning, a lot of times the hardest part is starting the initial conversation to get things going, whether you're the current business owner or the next generation trying to take over. Just starting that conversation is really hard. One of our success stories, we recently had a client come to us, and the son came to us, and at the time, him and his father were actually not even speaking to each other. Their relationship had digressed so far, trying to work with each other, that it was a little bit hopeless. And through some very difficult conversations, we were able to help them come up with a successful transition plan. So we just really encourage everyone to start talking, amongst yourselves, with your business partners, or to your trusted professionals, to get something going. So if we can go to the next slide. A little bit about Whipfly. We have offices across the U.S. I am in Montana and focus in the ag industry. Because of the size of our firm, though, we have specialists in a lot of areas that we like to help our clients with: the research and development credits, IT, valuation, cost seg studies. So we do a lot more than just tax returns. Next slide, please. So I wanted to focus mostly today on talking about the financial statements and the financial preparedness of your business when you start to look at a transition plan. One of the very first things that we talk to clients about is, do you know how much money you need in order to live after retirement, if you're the ones transitioning out of the business? And that can be difficult, because maybe the business is paying for some of your day-to-day expenses, your living expenses, your vehicles. And so that's a question that a lot of people can't answer. So if you're starting to look at a transition plan, you want to look at your financials and separate your personal financials from the business's financials, and get a feel for how much you actually need in retirement to live off of. And then look at, is that something that you're going to get through payments from the business, or do you actually need to sell the business in order to accomplish those goals? When you're looking at the business's financial statements, the small businesses that we tend to work with a lot of times don't have really good, clean financial statements. So if your financial statement is looking at your tax return, then you probably need to do some work in this area, because your tax return, your balance sheet is based off of a cost basis. And so what does the fair market value of the assets that you own look like? And where are you at from a business standpoint with your financial statements? Like I said, taking out the personal expenses, looking at, have you paid fair compensation to the owners over the years? A lot of times the owners will take lesser of a compensation than they would if they were doing the same job for somebody else, because it's their business, and they're relying on the equity and the growth in the business to help pay for their retirement. And then looking at the cash flows of the business versus the equity. We deal a lot with the agriculture industry, and so sometimes the cash flows just aren't there. And so how are you going to allow the next generation to come in and take over the business with a limited amount of cash flows? And a lot of times there is a lot of equity because of the land. There's a lot of value in the land that we see with our clients. But that doesn't help with the day-to-day cash flow problems that can happen with small businesses. And if we could go to the next slide. Then looking at some of the tax strategies that we look at when we're looking at a transition plan, evaluating the entity structure, as the tax laws have changed significantly over the years and will continue changing. It's always a good idea to evaluate your entity structure and make sure that you are in the best structure, not only for tax purposes, but also to assist in the transition plan, whether you're selling to another company or transitioning to the next owners. With C Corps, S Corps, partnerships, LLCs, there's a lot of different flexibility in the things that you can do. And if you're a C Corp because you've always been a C Corp, maybe that needs to be evaluated and changed to facilitate the transition. We want to look at maximizing tax brackets for the owners, and with the new corporate rates being a 21% bracket, there isn't a lot that can change there, but for the owners, we can definitely work on maximizing the wages, looking at commodity wages, that type of thing. If you're a business person who has put all of your assets back into the business, you maybe haven't put enough into retirement over the years. And so we can help you to identify some retirement strategies that will not only save you taxes, but help with your transition plan. And then looking at the gifting and estate tax exemptions. Right now, each person has about $11.5 million exemption for gift and estate taxes. That will go down expectedly in the future. With the new president, there's some talk that could go down to 3.5 million, which would be a huge adjustment and could significantly affect some people's estate plans. We haven't been worrying as much about estate taxes right now, but that could shift significantly in the future. And then other unique opportunities that we can identify, like I mentioned earlier, the research and development credit is something that not a lot of companies in Montana have taken advantage of, that we have found. And it's especially in the ag industry, there's always research and development going on because you're trying different chemicals, different fertilizers, different crop rotations. And for the research and development credit, it just has to be something that's new to you. It doesn't have to be actually new to the industry. And so we've been doing a lot of work in that area recently. And so if you have questions and if you are interested, just give us a call, and thanks for your time.
Thanks, Dana. We've checked the box on the accounting part of this process, and we can't proceed any further until we make sure we also hear from the attorneys and the legal side of these sort of processes. Bill Van Canigan out of Missoula is our next speaker. Bill was raised in Missoula, where he graduated from Sentinel High School in 1974. And then he graduated from Stanford University in 1974. That can't be right. Did you graduate from both at the same time, Bill? I must have a
78 from Stanford.
78 from Stanford. His tenure included a year of international studies at Stanford University campus in Germany. He returned home to attend law school and then graduated from the University of Montana School of Law in 1978. After law school, he attended the graduate program in federal taxation at Boston University, where he graduated in 1981 with an LLM in federal taxation. In 1982, Bill joined the law firm of Detsopoulos, McDonald, and Lind in Missoula. He's a shareholder in that law firm, specializing in estate and succession planning, estate and gift taxation, commercial law, and business transactions. His clients include family and closely held businesses in a wide array of industries, including technology, manufacturing, construction, real estate development, and professional physician groups. His expertise includes business restructuring, preparation of ownership and asset purchase agreements, management agreements, and business continuity agreements, incentive compensations, and a myriad of succession planning tools. If Hollywood were typecasting for a Montanan, I think Bill Van Canigan fits that mold, and you're about to see and especially hear why he would fit kind of the stereotype for a Montana Hollywood actor. Bill, enlighten us on the legal side of the challenge with succession planning.
Thank you, Todd. I appreciate that. I haven't been carrying my 6-shooter into work these days yet, but who knows what the future may bring. I'd like to thank everybody for taking the time today and for sitting in on this presentation. And it's my hope that you take away from these presentations some very valuable information related to the succession planning process. You know, as a lawyer, I represent buyers and sellers on both sides of the transaction. We handle asset sales, stock sales for closely held business owners, and other exit strategies, including management buyouts, partner transactions, buyouts, and leveraged employee buyouts, including ESOP transactions. From a legal standpoint and from my standpoint as a lawyer, protecting value of an owner's business is fundamental to a succession plan. And it's interesting because, you know, businesses may be successful, but can still fail the owner in unexpected ways. And we're not talking about business success when we're talking about succession. We're talking about an owner-based definition of success, not one that measures success based upon how the business performs, but the benefits that an owner receives when that owner is ready to retire and when it's time to leave. Because in the end, what every owner really needs and wants is the ability to leave the business under his or her favorable conditions. And if there's one universal truth in business life, it is that at some point you will leave your business, whether it's through retirement, through death, disability, or any other scenarios that can unfold during the course of your life. And you can leave it successfully, but in order to do that, it's essential that you create an exit plan as early as possible and stick to that plan. And when we look at a client's exit strategy, we try to define it in terms of three different long-term goals. The first is, how do we maximize the value of this business as an asset as we exit? What's the best strategy? Is it a sale to a third party? Is it an intergenerational transfer to family members? What fits? Secondly, we, as some of the other panelists have mentioned, as lawyers are part of a team. And it's essential for that business owner to put together a team of trusted advisors that that owner can rely on in the exit planning process, because there's no one advisor that can provide all of the information necessary to create a successful exit plan. Certified public accountants, wealth advisors, investment bankers all bring different skills and talents to the table. And it's very important that all of these different professionals work together for the business owner as a cohesive team. And if there's one question that I get or frustration that I get from business owners in this process, is that their existing team of professionals aren't communicating, and they're not sharing information in a way that contributes to the fulfillment of a cohesive goal. And that's part of what our job is, and that's to work not just cooperatively, but productively with the other professionals on the team to achieve an exit that benefits the owner and maximizes value. I think the second consideration that we look at and we think is very important to address, and that's the financial plan that the selling owner needs to have in place in order to successfully exit. And then finally, as Vu mentioned in his presentation, very important for the selling owner to have a plan for life after exiting the business. I've sat in this conference room. I can think of one case in particular where we had gone through the sales process and had structured a sale to a third-party purchaser. We were a week away from a closing. We had documents spread out on this conference room table. The owner and his wife had come in. The transaction had been structured very favorably, mostly a cash transaction. And as we sat at the conference room table on a Friday evening, the week before the closing, the owner became very emotional. And I didn't understand it because we'd been working with him for months to put this plan together. But he said, until this week, it never really hit me that after next week and we close this transaction, I'm done. And I really haven't thought about what I'm going to do going forward. You can only play so many rounds of golf. You can only build so many houses after you exit, or whatever it is that you want to do. But unless you have a personal plan in place and you start to think about that plan and reduce it to writing and work it through early on in the process, that's one element of the exit process. Very, very critical element that's going to be missing from your life. So with that, if we could switch to the next slide. These are some of the essential questions that we try to answer early on in the estate planning process. And as lawyers, one of the things that we do is that we try to work with the clients to protect assets and to develop a contingency plan that syncs up with the owner's estate planning documents. So, for example, what would happen if there was a death in the family, or if there was a disability that appeared unexpectedly? Have you implemented the steps necessary to ensure that the business can continue? Is your succession plan in sync with your estate planning documents? What are the income and estate tax strategies that are available to you to make this a successful exit? Because when you're ready to sign at a closing, one of the issues that has to be understood is how much are you going to net from that sale and how much can you carry over into your next life to ensure that you're financially secure? And one of the big questions that needs to be answered is how much are you going to pay in tax, income tax, estate tax, gift tax, depending upon the type of plan that's structured. When you begin the process of succession and you begin to develop a succession plan and move toward a sale of the business, one of the stages of that process is going to involve what we refer to in the law business as legal due diligence. And so what I try to counsel my clients on early on in the process is, let's make sure that we've taken a good look at the company from the inside to make sure that the company is ready for sale and that the legal issues that a buyer is going to be concerned with have been adequately addressed. So we can see the next slide, please. And this is part of that process. And I refer to this in my practice as a legal audit. And a legal audit, although there is some cost associated with it, in the end, it produces big dividends. And the reason for that is because during the course of the legal audit, you will answer questions and you will resolve issues that the buyer is going to be interested in. You'll have a proactive approach to this and you'll have these issues resolved and you'll be prepared to answer questions. So here's some of the areas that we like to look at. We review existing practices and procedures. We uncover potential legal issues, litigation issues. We take a look at the critical operating documents. We want to make sure that basic corporate documents are in place, that share certificates have been issued. We've had situations develop where share certificates were issued 15 years ago to minority employees as an incentive, but were never redeemed or were never canceled. The buyer comes back in and takes a look and says, well, what about this ownership interest? Where is it? And why hasn't it been taken care of? And then we have to spend time attempting to track down that person and resolve that particular issue. So troubleshooting problems before they arise saves time, and in the end, it saves money. So if we could have the next slide, please. And finally, I just wanted to mention briefly the business continuity agreement. This is a document that I like to refer to in my practice as a damage control instrument. And it's probably the most important document that a business owner, especially a business owner with partners, will ever enter into. This is the document that controls the transfer of ownership upon the occurrence of a myriad of different unforeseen contingencies, such as retirement, death, disability, business disputes. These are documents that should be referred to as proactive asset protection documents. And they should be reviewed once every several years and updated, especially if a business has partners or co-owners. One of the benefits of going through this process is that it fosters communication. It gets people to the table. It gets people talking about the business, and it gets people talking about the long-term vision for the business and the ultimate transfer of ownership. How is the business going to be valued? What are the terms and conditions of a buyout if it were to occur? Is there life insurance involved that can help facilitate a purchase? And so these are important documents, and they force owners to communicate and resolve difficult issues. And, we encourage that discussion oftentimes on an annual basis. And usually those types of discussions lead to what I refer to as spin-off issues, or issues that relate to the business that they hadn't considered that aren't necessarily within the purview of the business continuity agreement, but should have been talked about. So these are some of the areas that we as lawyers deal with. You know, again, we consider ourselves to be part of a team, and more than just part of a team, but part of a team that's built on trust. So thank you for your time today. It's much appreciated, and be available down the line for questions.
Thanks, Bill. We're starting to get a good picture here. Sale of a business or the transition out of a business is more complicated than one might think. But the good news is that, I think we're creating a path here that, with a little bit of work and thought process, that this what would seem like a complicated process, you can actually follow a path to come to the end in a successful manner. So thanks for walking us through some of the legal considerations we need to consider through this process, Bill. So we're going to turn now to Ray Round. And Ray is a certified financial planner, and he is a certified wealth strategist, leveraging close to 3 decades of financial knowledge and experience. And in 1992, he began his career serving as an investment executive with the major New York Stock Exchange firm in Spokane, and then he joined D.A. Davidson, one of Montana's own success stories, in 1995. Over the years, he has served on the D.A. Davidson companies and the D.A. Davidson Investment Advisors Board of Directors, and on the D.A. Davidson's Managed Asset Investment Committee. He's been a member of the D.A. Davidson's Chairman's Council since 2002. Ray is going to talk to us a little bit about life after the sale of a business and what you're going to do with the proceeds from the sale of your business, and some of the thought process that needs to occur as you start to think about exiting and then after you have actually exited. So with that, Ray, thanks for joining.
Well, thank you, Todd. And like the others, I sure appreciate the opportunity to be part of this group of professionals and share my thoughts from the perspective of a financial advisor. In the sake of time, I'm going to skip forward very quickly. I think, this is the second time we've presented this webinar, and I think just what jumps out at me right away is what many of these folks have said, Vu and Bill and Dana. There is so much overlap between what all these professionals do. And going last, I get some of the thunder stolen. But I'm going to skip a little bit forward. I'll give you a quick review, of our firm. Obviously, most of you are probably familiar with D.A. Davidson, as it was founded in 1935. I think what we're proud is that we still remain employee-owned today. I'm one of 370 professionals working in the wealth management division. So I'm representing those folks, 11 offices which are here in Montana. We also include a trust company, an in-house investment advisor, a fixed income management division, and a full service equity capital markets platform. Next slide, please. Within D.A. Davidson Wealth Management, I'm the senior member of a team, the Round Carlino Investment Planning Group. And my team includes my partner, Sydney Carlino, who is also a certified financial planner and certified wealth strategist, and 3 client associates, Marla Cassidy, who's a registered client associate and registered paraplanner, Megan Ingersoll, who's a registered client associate, and the newest member of our team, even since last webinar, is Carter Miller, who is a recent graduate of the University of Montana with a degree in finance. And we as a team are dedicated to helping our clients manage wealth through all of life's transitions, not just business transitions, all of life's transitions, allowing them to spend time with family and friends and doing the things that they care about most. Business transitions are one of the most challenging and rewarding opportunities we have to make a difference in our clients' lives. As the panel shared, there are a wide variety of needs and considerations when it comes to business transition. business transitioning in your business. Our role is to help business owners design and implement a comprehensive personal financial plan and wealth management plan, and to coordinate with these other trusted advisors to guide you through this process before, during, and after this transition. We want to help you create a picture, so to speak, before you pull the trigger. And I think that's the message that you've heard from everybody is it's important to get people involved early, professionals involved early, and keep those professionals communicating. And we like to call ourselves kind of the quarterback of that process. So there's really, an experienced group of financial professionals are able to guide you through 4 preparatory steps, so to speak. First is creating your vision. And you've heard this again from the other speakers. It may seem like an obvious first step, but fewer than half of business owners have a transition plan in place. And there are often gaps between your vision and the infrastructure in place that's needed to execute that vision. It's important to have clarity in what you're transitioning to before you set the process in motion. Somebody else said it's important to know what you're going to do with your time. Most business owners go from spending 60, 70, 80 hours a week or more at their business, and now all of a sudden that time might be spent at home. An example of this and where we kind of fit in, I was recently involved last year in a business transition where the clients were in fact transitioning their business to their son. Dad was going to stay employed by the company for a couple of years in a consultant role before completely retiring. This way he could continue to kind of transition the workload to his son, and the benefit is he could collect a few extra dollars until full retirement age. But really when it come down to our conversations, it was to get mom comfortable with having dad around the house all the time. Well, after 3 months of planning, COVID-19 shut down the economy and the business revenue dropped in half. The workload decreased and the son had to start cutting expenses at this business. Now, we certainly didn't plan ahead for a viral pandemic, but fortunately this couple had created a vision and we created a plan with multiple what-if strategies. So we simply pivoted into plan B, and now dad is transitioning back to full-time spouse from the golf course. Step 2, really what we get involved in is building the team and helping you find the team members. I'm going to skip that. I think we've all discussed that. And then get really into the most important part of my presentation, and that's defining your financial goals and objectives for post-transition, and specifically your income expectations. This is not only obvious and essential, but are often overlooked in the pre-planning stage before the sale. This can range from budget and cash flow projections to, as Bill mentioned, various different transition and sales strategies, to developing your financial and estate plans. How much will you need to maintain your lifestyle as you've envisioned? And are your goals and objectives realistic and your income expectations reasonable? Most clients underestimate their income needs in retirement, and they overestimate the amount of income their investable assets are able to produce. In all my dealings with sales of businesses, this is almost always the most enlightening process for owners. In our opinion, it's critical to see that you're able to see your vision and your plan and what it will look like, how it will impact your lifestyle, your family, and your philanthropic goals, if you have them, before moving forward with a transition or sale. And then finally, it's creating thoughtful wealth transfer and estate plan strategies to ensure your vision endures for future generations and for your valued charities, again, if those are a consideration. There's simple things like personal reps and trustees. Do you have a trusted heir or individual, most times it's the children, to act as your personal rep or successor trustee? Maybe another thought is, do this person or individuals Do they want to be put in this role? Or might there be a benefit to naming a corporate trustee to remove conflicts of interest or confrontation amongst various beneficiaries? As Dana mentioned, we're about to, well, not about, excuse me, we have a sunset provision on estates that reduces the estate exemption amount going into effect in 2026. Will that impact your overall estate? Does it impact your goals and objectives? Is one of your goals to maximize wealth transfer to your heirs? Is there a need for a risk management plan to protect your existing wealth? Or is there a need for tools and solutions to replace wealth lost to estate taxes? And finally, is there charitable intent? And if so, how will the charitable aspirations be funded? Developing these thoughtful financial and estate plans aligned with your vision will answer many of these questions, and it's important to see how this works out before you make the commitment to move ahead. And finally, as important as discovering your vision is in the pre-transition phase, the process of preparing to execute your plan is equally important in the transition process. For most business owners, the business is part and parcel of who they are and where they derive a sense of purpose. You built your business yourself and have had control over every aspect of it for years. You know it inside and out, and it's what sustains your lifestyle and your family. These elements of business control and income generation will be separated post-transition, and it's important to mentally prepare for this. Excuse me. My team and I have guided many business owners through the process of ceding control, shifting to an investor's mindset rather than that of an owner. And I'll tell you, it's easier said than done. Success as an investor requires an incredible amount of transition of that trust to others. You must be comfortable with all your advisors, the professionals here on the panel today, their philosophies, understanding of the markets, understanding of portfolio construction and risk management. And it's our job as advisors to coach you through this so that your income can be maintained and goals achieved. Moving to an investor's mindset is critical in being able to execute the financial and investment plan. It's not uncommon for business owners to struggle to actually pull the trigger when it comes to executing their investment strategy because they don't have control. The problem with that is time spent on investing can have significant long-term impacts on your financial plan. As an example of this, 8 years ago, as I was approached by a referral, which is now a client that had sold his business for several $1 million. I was not involved in the pre-transition phase, and come to find out the proceeds of the sale had been sitting in a savings at his bank for 4 years. When I asked why, he told me, if you think back, 8 years and 4 years prior to that, the markets were significantly down and they were recovering so quickly. He could never get comfortable with letting go of the funds to get them invested. Just maybe having a strategy in place prior to that sale would have helped alleviate some of his fears, and they certainly would have resulted in more assets available to draw on and income off of. So as a financial advisor, it's our role to ensure you're armed with the information and understanding you need to make these wise and prudent decisions. Our ongoing relationship includes reviews and check-ins so that we can adapt and refine these plans over the course of time as your ever-changing goals and needs happen over time. And when the time comes, we will support by coordinating execution of the wealth transfer strategy, whether that's to the kids or whatever your intentions. So I would mimic something that James said, and that is, get your advisor involved early, whether it's one of the great professionals at my firm across the state of Montana, or if you have a trusted advisor, financial advisor at another firm, get them involved early in the process so that they can kind of guide, communication so that you can have a clear picture and an illustration of what it looks like after transition of your business. And with that, I appreciate your time, and I'll send it back to Todd.
Thanks, Ray. Round, great discussion about probably a part that most people don't spend much time thinking about, which is, what am I going to do after I sell my business or transition out? And so thanks for giving us some things to think about that might not be natural as we go through this sort of a process. So wrapping up our webinar here today, I want to turn to Jeff Batten. And Jeff is with Homestake Ventures, venture partners out of Bozeman. And the Homestake Venture Partners in and of itself is a great story with a great mission that they're doing. And so we're happy to have Jeff with us today. A little bit about Jeff. He's a seasoned entrepreneur who has been a growth stage executive for many businesses and investors throughout the region. Jeff grew up in a small town in the Midwest, got his finance degree from the University of Illinois, and soon headed west. He landed in Bozeman in 2001, and Jeff kind of considers that he was kind of at the front of some of the major growth that we've seen, particularly in Bozeman and Western Montana. His experience includes long-term leadership roles with an extensive list of well-known local businesses, including Printing for Less, Foundant Technologies, Wisetail, the Natural Baby Company, and Blackmore Sensors and Analytics. He's been directly involved in more than $250 million in transactions for venture-backed and homegrown businesses across the Northwest, and in billions of dollars of funding for public companies. With that, I'll turn it over to Jeff Batten with Homestake Venture Partners. Jeff?
Thanks, Todd, and hi, everyone. I'll try to move fast because I know we're running a little bit over, but it's great to be here with you. Appreciate the opportunity to share a little bit about what we're doing. And, you know, I think I can kind of flip to that next slide because it says the same as this first one, Todd. Oh, that's in a different order than what I thought I sent. Go to, yeah, you went too fast. Go to slide 2 in mine, if you don't mind. Yep, nope, next one. So here's kind of a market map, if you will, of what we look for in the opportunities that we look for. And I think it's a pretty unique and homegrown kind of solution to, I think, the type of capital that's needed in Montana and really has been absent most of my time here. And it's really from that experience that we've kind of landed on the solution that we're bringing, which is to really hone in on that center part of the capital markets, which are so hard to fill. And the reason we do that, it kind of goes back to what James said earlier, is there are tens of thousands of companies in the state of Montana. Most of them are not actually ever going to be able to attract, you know, the type of private equity, venture capital, angel groups that people spend so much time agonizing over. They just don't have those kinds of businesses. And you know, their goals for businesses are different. They're typically to grow a nice business, employ a lot of people, and have a nice life in the meanwhile. And you know, so I think what we're finding and what we have found is that there are a lot of really well-run companies in the middle that, you know, for whatever reason might not be able to get all of their bank finance or get all of their financing from a bank. That's a role where we often fit in. And then in other cases, we're not necessarily just looking at super rapid growth type of investments. We're looking for regular companies, and we structure our deals differently than most in order to make them still attractive on the investor side. So that's kind of how we fit in. You know, if you want to go to that next slide, it starts to talk a little bit about why we're doing this, and I won't spend a lot of time on this, but the reason we see this as a huge opportunity is honestly the banking industry has consolidated down to the point that there's less than 1,000 community banks in the country. And you know, those folks used to be able to finance these kinds of transitions that we're talking about. They used to be able to lend money. Like I think of the anecdote of my father all the time. He was able to borrow money from his local community bank in order to buy stock in his father's welding supply business. I've never met a banker that would do that in my career. And, honestly, it creates an opportunity for investors like us to come into really well-run companies and help make a difference. So our mission is to kind of play, to not be one size fits all, to really look at each company on its own merits, think about what its balance sheet might allow from an investment perspective, and not be one size fits all. I think that's on that market map before. Really, many of the other investors really have one tool in their tool basket. They might make preferred equity investments in rapid growth companies, and that's it. Where what we're saying is, hey, this is already a small enough market. We should be screening for well-run companies and then figure out what the capital ought to be designed like to make it work. So that's what we've been doing. And if you want to flip forward, Todd, maybe this talks a little bit about, how are we doing that? Because I would say that it does take a specialized team, and specialized in a way that we're generalists. We've done a lot of different things in our careers. We've been investors, but we've also been CFOs. I mean, big part of my life today even is to be a part-time CFO for several companies over here in the Bozeman area. And, that gives you hands-on experience in helping solve some of these pretty thorny questions. And, so we've done things from really sort of a recapitalization is kind of what's on the pie chart on the right-hand side. We haven't done a ton of those, but they've always been very intricate, as everybody else on this webinar has shared. And interesting, like they're way different from one another oftentimes. So, most recently I've helped a company here do a minority sale of stock from the founders to new investors for a $20 million exit, but it's just a partial exit because they don't really want to sell the whole company. They don't really want to give up control yet. On the other end of the spectrum is a small service business that wants to bring along, some guys that have been working there for almost 10 years to become partners. So figuring out all of the issues around that has been interesting and complicated as well. Bottom line is, I'm a firm believer that every business in the state of Montana is different than the other one. We might have some similarities, but there's unique situations that have to be addressed. And I think the thing that frustrates me and has caused us to start these funds is the fact that there are no investors out there that are willing to kind of play the field. And that's really what we have set out to do. So the next slide, I'll talk a little bit about where we've been coming from. If you want to flip one, Todd. This will just kind of give you an idea of the types of deals, and the next slide's got logos on it too. We can flip it in a second, but basically we have over the last few years essentially piloted a fund. So we've basically built an initial fund around all these concepts that I was just describing. Right now, we're working on our second fund, and we're actively fundraising and looking for limited partners to join us in this kind of investing. And, I think bottom line is maybe the easiest way to see it is either of those sort of bar charts explain that we do three different categories of investing. There are times when we do long-term sort of buy and hold equity because we think that the company is eventually going to sell to a big buyer. And so we kind of think of that as the traditional kind of cross your fingers kind of equity. We don't know when it's going to exit, but because of unique circumstances, we find ourselves able to participate. So as an example is that company that we've done the $20 million of equity transition with. We were a small player in that investment round because we think it's going somewhere. Other end of the spectrum, there's opportunities in debt where a company walks in and has been turned away from the bank for oftentimes what seem like really silly reasons. And, we'll look at a situation where the company's been in business for 10 or 15 years and figure that they know how to run their business and how to pay back a debt. And, comes to find out we can structure a pretty nice deal. And then in the middle is that sort of nested group in the center of that bottom left chart. is really kind of where we've started to specialize, and we do revenue-based investing. So it's still equity investing, but basically are looking for companies that have a little bit of excess cash flow that can support payments against, and it's kind of like dividend investing, I guess, where we can earn current returns, but we don't really get ourselves into a situation where our companies need to sell to some, probably outside buyer. Kind of goes back to why our name is Homestake. It's not because of the past. It's because we want to own. We want to see companies remain locally owned. And so, we do these kinds of deals in situations where the founders either want to transition to, like I said before, up and coming executives, or just situations where they just see eye to eye with what we're trying to accomplish and say, man, how do we figure out helping local investors own a share of this company, because that's great for our communities. Bottom line is we're bottom right of this chart kind of shows you how that's looking so far. Of all the investments we've made over the last few years, already 9% of the capital that's been outlaid has already come back to us. And yet we still have those asset values on the left-hand side still remaining out there to be paid. So it seems to be working. And I think why it's an important, I'll just say again, I think the being flexible in a smaller market like Montana, I think is really important. And it allows us to do a lot of things, all the way from being the only equity investor in something, all the way down to, in a lot of cases, providing a partial equity investment that allows that company to go borrow some money or take a different kind of equity investment. So we essentially leverage their dollars. And I think, from getting it to the topic of today, like how do we fit in? I think the thing that I'd be most excited to be looking at are situations, like I've said a couple of times, where founders are ready to step down and they're trying to figure out a way to finance the next generation to stay in the company. At that point in time, that company has proven itself worthy of its customer base and knows how to deliver whatever sales, services, or products it's delivering. That's a great time to invest. And so those are the kinds of opportunities that we're looking for. The rest of the slides are really just bios about us. So I assume these will be shared, and contact info is in there. And love to hear from any and all on this call of any questions and thoughts about how we might be able to work together. But thanks again for all of your time. Appreciate it. I know it's a long time to sit on a Zoom meeting.
Thanks, Jeff. Appreciate it. And I think Jeff has done a nice job of kind of bringing us back around full circle. We've started, towards the top, James talking about some of the investment opportunities and interest in Montana. And we wrapped it up again with Jeff talking about some of the interest that Homestake has in Montana. And so in between was a bit of the path on how we're going to get there. And to me, it's exciting opportunities here in Montana after years of being a state that we haven't seen a lot of great, exciting sort of economic growth, that there is a lot of interest in Montana today. There's a lot of capital looking for a place to call Montana home. And so there's lots of opportunities here. Now, we'll stop the recording now. We've been recording this session here so that we can distribute this portion of the meeting to you in case you want to take a look at it, or for some additional information, or to others that weren't able to join today, they may be able to pick up the recorded version. So